Access to finance is one of the biggest challenges facing SMEs in Uganda's oil and gas sector. In this lesson, we explore the different financing options available, including commercial loans and microfinance, to government grants and private equity. We will also highlight strategies for improving creditworthiness, building strong business proposals, and leveraging partnerships to secure funding. Understanding this is key for SMEs to grow, invest in new technologies, and remain competitive in the sector. So, how can SMEs obtain sector financing? Obtaining sector specific financing is crucial for SMEs that are looking to grow in the oil and gas industry. This involves identifying financial products and funding sources that are tailored to the sector, such as specialized loans, government incentives, or industry partnership funds. Leveraging sector specific financing can provide the capital needed for expansion, technology adoption, and competitiveness in Uganda's oil and gas market. When we look at short term operational financing, here we refer to the sort of financing that helps SMEs manage day to day expenses and maintain smooth business operations. This type of financing includes options like overdrafts, trade credit, and short term loans, which provide quick access to working capital. By effectively using short term financing, SMEs can cover operational costs, respond to market demands, and avoid disruptions in their business activities. Short-term financing also includes invoice discounting, whereby SMEs borrow against unpaid invoices from large oil companies, or contract financing that enables banks to lend against signed contracts with oil companies, or local SACCO and microfinance options for smaller suppliers like catering, security, and logistics. On the other hand, mid-term financing provides SMEs with funding for projects and investments that extend beyond daily operations, but are also not long-term. This includes loans or leases, typically ranging from 1 to 5 years, which can be used to purchase equipment, expand businesses, or upgrade technology. In terms of sector-specific financing that is unique to oil and gas, there are considerations for Local Content Fund and the Petroleum Authority of Uganda that shall offer affordable working capital loans for SMEs on the National Supplier Database. We also have supplier development programs by international oil companies that support SMEs with contract-backed financing in partnership with banks. In addition, there are guarantee schemes that reduce collateral requirements when SMEs borrow to finance operations. Other tools used in the sector include bid bonds. Bid bonds are a type of financial guarantees used in the tendering process. Bid bonds assure project owners that a bidder will enter into a contract and provide the required performance and payment guarantees if awarded the contract. For SMEs, bid bonds enhance their credibility, increase the chances of winning contracts, and also demonstrate financial reliability in Uganda's competitive oil and gas sector. In addition to that, we have bid securities. A bid security is a financial instrument that protects project owners during the tendering process. It guarantees that a bidder will honor the terms of their bid and enter into a contract if selected. For SMEs, providing bid security demonstrates credibility, financial responsibility, and commitment, hence increasing their chances of successfully securing contracts in Uganda's oil and gas sector. Bid securities can be check, can be cash, or bank guarantees. They could also be direct financial commitment from the bidder. Now, let's move on to some internal financing strategies. These involve using a business's own resources to fund operations and growth rather than relying on external funding. This can include retained earnings, cost savings, or reinvesting profits. For SMEs, leveraging internal financing strengthens financial independence, reduces debt risk, and allows for more flexible, sustainable growth for enterprises. In conclusion, let's explore some practical scenarios for accessing financing. For example, an SME may seek a short-term loan to purchase raw materials for a new contract or use retained earnings to invest in machinery upgrades. Another scenario could involve securing a bid bond to participate in a government project or partnering with an investor to expand operations. Understanding these real-world applications helps SMEs choose the right financing options for growth and hence propels them to growth and sustainability.